Let's unpack those market movements now. We've got Nadir Thokan, who's Investment Director for Client Strategy at SEI, joining us. Thanks for your time this evening, Nadir. Let's start with the all share. So we haven't seen the moves that we saw yesterday, which wasn't very great. Obviously, like I mentioned in my intro, those tension between the United States and China have eased somewhat. Your thoughts on today's trading day?
Yeah, so evening. Thanks for having me. Look, I mean, I think all in all, it's obviously a much better day. That was in the numbers and clear for everyone to see. And I think it's on the back of improved global kind of risk appetite. So there's a lot of volatility about at the moment. And globally, if we see how the US has opened, we've got the US market up around just under 1%. So our market really gaining a lot of steam from that and really being led higher by a lot of the tech and the growth orientated shares, which have really lagged the market badly so far this year. And we're seeing some better than expected earnings announcements coming out of those companies, a little bit earlier on into the start of this quarter, is starting to reverse the fortunes a little bit for those companies. And at the moment, there is this to and fro and this whiplash in the market between these escalating geopolitical risks and clearly companies which are generating better than expected earnings numbers. So, obviously difficult to tell which way it goes in the short term. As the saying goes, the market is a voting machine in the short term and a weighing machine over the long term. And we're seeing now is no exception to that. We've seen the local market up nicely, some strong numbers or anticipation of strong numbers out of ABSA. That boost, getting a strong boost there, but really firm across the board. So nice to see some green, but it is very volatile at the moment. And these geopolitical tensions, as you mentioned, is weighing on risk appetite quite a bit and causing a lot of this volatility that we are seeing.
Some volatility that we're also seeing, Nadir, is on the local unit, the rand, losing a little bit of ground against the US dollar. What would you say were some of the major contributors for us to be back within that 1685 range against the USD?
Yeah, so it's been bouncing around a lot, hasn't it, the rand? And there probably is one global very good proxy for risk appetite is the South African rand. And when global risk appetite is poor and we're seeing money flowing out of emerging markets, the rand is obviously one of the big kind of losers in that event. And similarly, when risk appetite is strong, we see the rand recording strong gains. So the rand is a good gauge for risk appetite, and the fact that it's bouncing around as much as it is, on the day, I think it's only 3 or 4 cents weaker, so there's not a lot in it, but it's been bouncing around in a very wide range, intraday, and kind of 10, 15 cent moves stronger, and then 10, 15 cent moves weaker, so it is volatile in terms of where it's bouncing around, and I think that, alluding to my earlier statement, is very indicative of this kind of excessive volatility and, this voting that we are, this voting machine that we are seeing in the short term. Obviously, China, Taiwan, the US is the biggest risk story at the moment. Obviously, Russia, Ukraine continues to weigh on sentiment. And obviously, global growth is another big one as well. We're starting to see PMI numbers rolling over quite strongly across the major developed markets, indicating quite a strong rollover of growth. And in fact, a technical recession in the United States. And with still some fairly significant interest rate increases to come. So you've got all of these factors, both macroeconomic, both geopolitical risk, kind of all combining into this perfect storm to cause a lot of bouncing around in the short term.
And I'm glad you bring up global growth. Maersk, which is the shipping company, one of the biggest, and is a great global barometer for what global growth will look like, indicating that it's actually not looking too great. If we think about South Africa, for example, panel beaters are taking even longer to fix cars because they can't get parts in to the country for whatever reason. But that indication by Maersk really just alludes to what you've described there in terms of fears around a global recession and really what's set to happen on the global playing field when it comes to economics.
Yeah, there's no doubt about it. So I think the departure point here is that we still kind of haven't, figured out all the supply side constraints that have been caused due to the COVID crisis and clearing out a lot of that backlog. So we've still got supply chains which are under a little bit of pressure. And then when you overlay that with the fact that the global economy is undoubtedly slowing, we mentioned PMI. PMI is a leading indicator of where economic growth is going. And PMI has been slowing quite drastically over the course of the last couple of months. And in fact, over the course of the last couple of quarters, PMI has been slowing quite drastically. So that is an indication that, global economies are starting to become a lot less productive. And at the same time that they're a lot less productive, and at the same time we see, commodity prices squeezing a lot of these economies, and inflation squeezing a lot of these economies. We are also seeing, snafus in terms of supply chains because of COVID delays. So ports reopening, shortage of containers. Maersk will obviously be able to speak to that with a lot of authority. Declining shipping volumes are happening at the same time. So it's kind of culminating quite a challenging dynamic for the global economy. And if anything is to go by, if we look at what commodity prices have done, the oil price is off, more than 25% off its highs, where it was kind of in early February or late February, kind of early March. And a lot of other commodity prices coming under pressure, indicative that global demand is starting to slow. And that unfortunately is not positive for global growth and adding all of this market volatility.
Yeah, Nadir, thank you so much, as always, for your time this evening. That is Nadir Thokan, who's Investment Director for Client Strategy at SEI, joining us to wrap up the markets a day that was. And that's all from the business desk for now, Salia.